Hi, I'm Andrew Berman with the Mortgage News Network. We're here in Boston at the MBA National. I got Bill Killmer, who's the head lobbyist for the Mortgage Bankers Association. Bill, thank you for taking the time out of your day to meet with us.
Yeah, Andrew, pleasure to be with you.
So listen, before we get into any kind of question, I want to ask you, what bills are you guys working on right now for the end of this year?
Yeah, it's been tough given the logjam in Congress, but there are a couple things in the pipeline. One in particular that I'd love to mention is a bill that really is a labor force mobility measure for mortgage loan officers. Would provide a transitional authority to originate mortgages if a mortgage loan officer was leaving a depository, a bank, to go work for a non-bank as an LO. But also if they were crossing state lines, it would give them 120 days to continue to have the authority to originate. And this is a bill that we negotiated. Obviously, it was introduced on a bipartisan basis in the House, but was negotiated with the state regulatory community, the Conference of State Bank Supervisors as well. So it passed on a bipartisan, very non-controversial basis by voice vote out of the House Financial Services Committee in March. And then it passed by unanimous consent by voice vote under suspension of the rules on the House floor in May. Yep. And so we've been working with the Senate Banking Committee leadership, again, on both sides of the aisle to see if we can't get that passed before the end of the year in the Senate. So it's something that could potentially see floor action, perhaps movement before the end of the year when Congress comes back after the elections in the lame duck session.
Fantastic. I'm sure there's countless MLOs right now that would be very, very thankful for that.
Right, absolutely. We think it's common sense, and it'll preserve important consumer protections that are baked into the SAFE Act, which is the underlying statute that would be amended.
Sure, fantastic. So listen, let's talk about secondary market reform. I mean,
sure.
What are we looking at go over the next 2 years? Are we going to see any kind of significant reform happening?
Yeah, I think that there's a unique opportunity potentially. Obviously, if you look at the GSEs, the two agencies, their capital levels are being drawn down eventually to zero under the current conservatorship over time. And in the event that one of them were to sustain losses over a number of quarters and there was a treasury draw, that would be a factor that could spring the Congress into action. But, Andrew, we're on the hinge point of a new administration, and so a new Treasury Department, a new HUD, a new White House economic team, and there are lots of different plans out there that have been put together by Republican and Democratic subject matter experts that have ties to the potential new White House leadership, and so it's definitely possible that these new leadership teams could lean into that, and we could see action on that over the next couple of years in the Congress. And now's the time to do it. To put a sustainable new system in place in the long-term interest of the housing system, but also the housing marketplace.
Fantastic. So listen, I mean, keeping actually everything healthy. Obviously in the industry, we know the demographic shift means that we're going to be more reliant on government programs. Can you talk a little bit about what we're doing to help solidify the foundation of the government programs?
Yeah, absolutely. And again, I think that's something that we can work on a bipartisan basis over the next couple of years. The government housing programs, whether that's at HUD, via FHA, supported by Ginnie Mae, the VA program, which is growing in prominence and importance and volume, and then the rural housing service programs at USDA. They're always in need of adequate resources, whether that's for technology needs or whether that's for personnel, or whether that's for having the manpower for quality assurance. With the loan portfolios. And so working with both sides of the aisle, I think that's going to need appropriate emphasis. We've seen the importance of those programs coming out of the crisis and the countercyclical role that FHA in particular played. And so I think that's something that we're going to continue to need to work on in the next couple of years, and I'm optimistic we will be able to do that with a new Congress and a new administration.
Fantastic. Last question. What do you love about Boston?
Wicked good chowder.
Yeah, that's right. Well said, well said. Well, thank you for taking the time out of your day, I appreciate it.
Andrew. Happy to be here.
I'm Andrew Berman, the Mortgage News Network. Thank you for watching.
This is Mortgage News Network.